includes Transcom, Stratcom, Spacecom, SOCOM, and Cybercom, all of whom poured all in support of comms efforts. And I want to thank, as the Secretary did, our Gulf partners who fought alongside each and every one of us every day. From the Kingdom of Saudi Arabia, the UAE, Bahrain, Qatar, Kuwait, and Jordan, all who joined us together to defend and protect our people and our assets, and who, if required, stand ready to do so again. And I want to thank my team at the Joint Staff who work literally around the clock in order to help me offer the options that I must with the associated risks to the Secretary and to the President. They are the hardest working people that I know, and I am deeply grateful for their service.
That was U.S. Defense Secretary Pete Hegseth and Chairman of the Joint Chiefs of Staff Air Force General Dan King, speaking about what just transpired and having a lot of gratitude toward a lot of different players. The takeaway from this is one of completion or near completion, and the idea that there has been a ceasefire that has been agreed upon. This is the reason why you're seeing markets fly, and the reason why they have stayed at session highs in the United States and pre-market trading across the board. Joining us now for more insight is Bloomberg's Tyler Kendall. Tyler, seemed like something, not necessarily of a victory lap, but it seemed like a real sense of completion.
So to your point, in this Pentagon update, Secretary Pete Hegseth said that the U.S. has achieved every single military objective, citing tactical successes in degrading Iran's military capabilities and their defense industrial base. He did go on to say, though, that Iran may still, quote, shoot here and there. That would be unwise as a ceasefire takes hold. The officials were putting a finer point on that post that we got from President Trump earlier on Truth Social, outlining that a potential longer-term agreement with Iran would include, one, no enrichment of uranium, and two, that the U.S. will work with Iran to remove already enriched material. We heard both of these officials saying that Iran will not be allowed to have nuclear capabilities going forward. Now, Hegseth says that there is a, quote, real chance for a real deal and real peace, but that the military remains ready to resume operations if needed. Of course, we had heard from Vice President J.D. Vance, who is now leading the next round of negotiations, calling the truce earlier today, quote, fragile. Lisa, we are still gleaning details on exactly what these negotiators will ultimately agree to. As you well know, it all depends on securing the Strait of Hormuz. But President Trump did float earlier today that the U.S. is willing to talk about tariff and sanctions relief with Iran if an agreement is reached.
Tariff and sanction relief for Iran. Also, though, talking on a Truth Social post about potentially putting a 50% tariff effective immediately on anyone who sells weaponry to Iran. What do we know, Tyler, about that?
Well, at this point, Lisa, it's unclear exactly which authority the administration would use in order to implement such a tariff regime, considering that the Supreme Court had already struck down President Trump's broad-based emergency powers under the International Emergency Economic Powers Act. Though, of course, we do know that there are other tools in the toolkit, as the administration likes to say, including those related to national security. We have reached out to the U.S. Trade Representative's office to get more details on whether or not anything is truly locked and loaded that could actually put those tariffs into effect. But it really felt like a message geared towards Russia and China, considering we know that they are at this point the largest backers when it comes to weapons supplies. And Lisa, we can say that there was reporting overnight from the AFP saying that President Trump feels that China actually was a huge player in getting Iran to the negotiating table for this ceasefire. Of course, President Trump is gearing up for his trip to Beijing next month, and perhaps this could be part of some of that leverage, as we know that China played a pretty big role when it came to any potential ramifications from this conflict, since most of the oil that goes through the Strait of Hormuz heads towards Asia.
Thank you so much for that. We're looking at markets that are surging on the hope of a ceasefire taking hold. Emily Rowland here with us of Manulife John Hancock Investments. Emily, how much are you looking at a scenario that truly is a parallel to what we saw about a year ago with Liberation Day, and then the de-escalation almost around this exact same time last year?
Yeah, I mean, that's certainly what markets are telling us. And, markets never fully priced this in, as we talked about earlier. The idea was that the U.S. was the only part of the world that was going to be impacted by this. If we think about cost asset performance coming into the day, Japanese equities up 7%. They are a massive importer of oil. Emerging market equities up 4%. US small cap value stocks were up 7%. Year to date, high yield bond spreads barely moved. They're up to about 330 basis points, back down to 3%. And meanwhile, you saw these kind of momentum darlings of the past year really surging the most this morning, whether it was the euro, European stocks, the Kospi, just remarkable. The DAX, as you mentioned earlier, seeing one of its best one-day gains. So we're just sort of back to the narrative really of the last 12 months since the market bottomed in the wake of Liberation Day.
What's a haven in this kind of market, given myriad different types of shocks that could be coming down the pike?
Yeah, it's amazing. And I think we learned a lot of lessons about what is a haven in the periods or the days over the last 6 weeks where we did see downside volatility. So we saw that the US dollar was the two things that worked were basically the dollar and energy stocks. What didn't work, surprisingly, were things like gold. We've had a lot of discussions with investors about whether you can consider gold a safe haven or diversifier against geopolitical risk. And recent history is telling us that maybe not so much. So some pretty interesting process at asset dynamics playing out here. We suggested that we would look at any backup in rates as sort of a gift to lean into the income that's available in high quality bonds. And we're certainly seeing that pay off this morning.
Do you think, though, that that has legs, particularly of longer duration, simply because we're looking at a global backdrop where every nation is trying to build up their supply chains, their domestic reliance, their infrastructure, and they're going to have to spend money? How much does that act as a overhang, as a potential counterbalance to some of the otherwise bullish sentiment that we're coming into duration?
Yeah, I mean, there are some little pockets of inflationary pressures, as you point to, and clearly commodities was playing a big role in that. But what I think bond markets aren't sniffing out is some of the disinflation that's coming down the pipeline. We're seeing it in areas like the housing market, the silver component of inflation finally seeing some relief. If you look at things like Zillow, home prices, they're about flat year over year. Rental prices are falling about 1.5% across the country. Shelter's 35% of CPI, so it has the ability to overwhelm some of those other inflationary factors. We're also seeing it in wage growth. I've spent a lot of time comparing this period to 2022. Wage growth was 5 to 6% at that time, and we're about 3.5%. So really not seeing that pocket of inflation showing strength either.
That said, we are getting earnings, and we're going to get earnings come next week, and they're expected to be very strong. Delta came out earlier today. They omitted full year guidance. There's a lot of uncertainty, but they beat expectations, and frankly, they show that consumer demand is strong. They might actually cut capacity in order to keep prices higher, in order to offset some of the fuel prices. And what we can see in earnings that make you rethink the sort of disinflationary narrative and frankly, a more muted level of growth. Yeah, we're looking at the impact of currency on earnings, most significant this Q1 season. And what you're going to see is really full comps in terms of the dollar was exceptionally strong in Q1 of last year. And the weakness is going to be really accretive to corporate earnings this year. So you think about 40% of the revenues of S&P 500 companies come from overseas. So when the dollar weakens, that translation effect is really, really helpful. It's almost like a gift. It's a sort of a liquidity release valve for companies when that dollar weakens. Then you look ahead, though, to Q2, Q3, the comps become much less favorable. So I think this upcoming earnings season can be a good one for companies. That being a key element there, but I think it gets a lot harder from here. Emily Rowland, wonderful to have you. Thank you so much for being with us. Emily Rowland of Manulife John Hancock Investments. As we look at a roaring rally around the world on the prospect of a peace deal, or at least a ceasefire agreement for the next 2 weeks. Coming up, we've got Tom Porcelli of Wells Fargo with inflation data in focus, core PCE and CPI on deck, and Yahira Anand with your morning movers, airline stocks very much in focus. This is Kate of CBS. Good morning.
for lots of the operators.
We did not get that premium on that short. Just broke even. Had to get out early there.
Bringing you the world of business and financial news.
Trying to find another entry.
I'm Michael McKee at Mount Everest. This, Bloomberg.
Yeah, should have waited for the POC.
Oil drops 30 minutes.
POC there.
I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, global markets exhale as the U.S. and Iran agree to a ceasefire, but core issues, so many of them remain unresolved.
Meanwhile, oil plunges below $100. Iranian state TV reports that the first ship has passed through the Strait of Hormuz with Iran's
Coming back.
While Exxon slides as corporate America recalibrates after the Iran war-driven oil shock.
Lots of things moving this morning. One of the big beneficiaries, Matt, in the stock market that I'm looking at pre-market are all of these travel stocks that have been beat up tremendously. We also heard from Delta Airlines. They were out with a cautious outlook this morning. They're expecting to take a $2 billion fuel hit due to the war, but the affluent are still spending, and maybe fuel prices are going to start coming down. So United, Carnival, all of them rallying.
Yeah, these U.S. airlines don't hedge. We're going to talk to Sid Phillips about this.
It's clearly on the wrong side of this.
Falling, as you might expect, alongside the slump in oil on the ceasefire deal. Exxon saying 6% of its global first quarter production was knocked out because of the war in Iran. Its shares are down just about that much. Chevron off 5%, and Occidental down almost 9%. Dan.
Let's get back to that. Our top story this morning, President Trump said that the U.S. is discussing sanctions relief for Iran, acknowledging a key ceasefire demand from Tehran after he threatened to destroy the country. Defense Secretary Pete Hegseth spoke in the last hour.
Operation Epic Fury was a historic and overwhelming victory on the battlefield. A capital V military victory. By any measure, Epic Fury decimated Iran's military and rendered it combat ineffective for years to come.
Joining us now is Becca Wasser, defense lead for Bloomberg Economics. She's led studies in war games for the U.S. Department of Defense. Becca, just how fragile is this ceasefire?
The ceasefire is incredibly fragile, and I think that that's for two main reasons. On the military side of things, we're already seeing potential attacks. We are seeing right now that Iran has continued to fire drones and missiles into the Gulf states, Saudi Arabia, Bahrain, UAE, and Kuwait. And that in itself might be a violation of the ceasefire. Additionally, Israel continues to conduct operations against Hezbollah in Lebanon, arguing that it has ceased attacks against Iran, but not against Iran's proxy group, Hezbollah. And if we're shifting to even the diplomatic things, the two sides are just so far apart on their various demands. Iran has provided very maximalist demands, including things like, the potential expulsion of all U.S. forces from the Middle East. For the U.S., the continued threat of Iran's highly enriched uranium or even its missile and drone program continue to be non-starters. And at the end of the day, Iran right now continues to control the Strait of Hormuz, which was a key war aim from the White House to have that fully open.
How strong, Becca, does the Iranian regime look now, still in place, possibly even more hardline than before? And how weak do we look from the perspective of our adversaries?
Well, you heard Secretary Hegseth saying that this was a complete victory for the U.S., a V for victory. I'm pretty sure that there's a very similar message circulating in Tehran and larger parts of Iran at this juncture in time. Essentially, the ceasefire is a temporary pause that allows both sides to claim victory and to claim that they have achieved some part of their mandate. The murkiness of it allows them to do that. But at the end of the day, both sides have taken hits. Iran has had its military capabilities degraded, but it still retains core components of its ability to defend itself and its ability to fire on potential adversaries. And the US has also taken some sizable hits in terms of its high munitions expenditure, some of its hits to forces. And at the end of the day, the greatest hit, frankly, has been to civilians in the Middle East, as there has been a high human cost of this conflict.
And Iran has also maintained their capability. It would seem to dictate the flow of traffic through the Strait of Hormuz. Becca, what do we know about whether this waterway will indeed be opened over the next 2 weeks?
So the wording of the Iranian agreement is very specific. It says that it's going to be open and that it's going to be at the discretion of Iranian authorities, in particular the Iranian military. So there are open questions about how many vessels are going to be able to get through, what is the method and means of which they're going to be able to get through, how much is Iran going to charge, and what path are they going to take? Because Iran still potentially could have earlier mine to the strait, and that is going to dictate how much traffic is going to be able to get through and which pathways they'll be able to take out of the strait.
Becca, how much has this excursion, as President Trump likes to call it, cost us? Pete Hegseth earlier said we only used 10% of our military force to decimate Iran. But we had a story last weekend showing that we're running out of those long-range air-to-surface missiles.
So there is a longer term readiness cost for the US military. That is some of the wear and tear that we have seen on US forces and capabilities, including an extended deployment of the Forward Carrier Strike Group. Additionally, you have seen this very high expenditure of really critical missiles and munitions that the US might need in potential future conflicts. And there's going to be a gap as the United States tries to rebuild those missiles. And it will take up to years to replenish those stockpiles, and that in itself is going to come at a high cost. And that is why we have a very high budget request for the Department of Defense this year.
All right, Becca, thanks very much. Becca Wasser there of Bloomberg Economics walking us through some of the key questions here. Let's get to the market reaction. JP Morgan's equity sales test says stock markets have probably found a floor as the latest ceasefire suggests uncertainties over the war have peaked. Let's get more on those market moves with Bloomberg macro strategist Michael Ball. And as far as the market's concerned, Michael, there aren't ton of unresolved questions. Is that what I'm hearing?
I have no idea, guys. I was with you. I think this is very uncertain. I think there's still a lot of actually kinetic action going on as we speak. We just saw a pipeline was hit. We know there were strikes overnight. There's still this question of whether or not Thursday or Friday Iran will open the strait. There's serious problems in Asia with fuels, and we know that's starting to hit real activity. That's going to weigh on global growth. That's going to affect earnings in the U.S. We are going into the earnings season, and now what we need to know is basically, is this 2 weeks for real? Or again, are we getting noise out of the White House, which has lost credibility in the last week because of all the wishy-washiness coming out in the messaging? So as far as levels, I'm not sure. We're all looking around. I don't see where support's going to build on the SPX, which again, the rest of the risk complex will take some cues off of. But because of the sort of wider trading range we've been in, it's still very uncertain where things will settle, if we're in a new range or if it's just going to be a much larger, choppier session still.
I was looking at this FT story that basically said hedge funds had built up a record short against European stocks. How much of what we're seeing is just a pain trade?
It looks like it. It's very expensive to hold shorts, and also with implied vol as high as it was, puts were very expensive. So you're going to see a lot of decay there. You're going to be rushing for the exit. If you're not holding on to a cash long, you're really not justified.
built its business on catering to well-heeled travelers who aren't as price sensitive as some of the people looking to fly on discount carriers. And that's really helped the airlines sort of weather these storms. At the same time, I mean, how long demand will hold up for and how fuel will impact their sort of projections for the year, that's something that's still uncertain. And that's why the airline did not put a sort of updated guidance for the full year, saying that there's so much uncertainty out there.
By the way, I was listening to an interview with Willie Walsh on Bloomberg Radio very, very early this morning. He of British Airways and now IATA. He was saying that they in Europe hedge, whereas the big US airlines I know don't hedge. Why is that discrepancy? And will we then see their shares react differently as a result?
So the US airlines haven't hedged for a while now. And the reason that some of the airline CEOs have said is because their fuel bills are so big that they can't afford, like essentially any sort of trade in any direction would move the market. And so it's much harder for them to hedge fuel. And European carriers tend to hedge fuel because it just sort of makes sense from an operational perspective. At the same time, I mean, we're seeing fuel shortages in some places in Europe. So whether or not you hedge that fuel, I mean, availability of fuel, and that's sort of having an impact on airlines as well, and sort of their planning and their routes that they operate. Because if there's no fuel to sort of refuel the aircraft, then you can't really operate the route.
Sid, thanks for joining us. That's Sid Phillip on the latest on airlines, on Delta, and a check on markets as a big rally gets underway. I would just note, though, that we had gains of more than 2% on March 31st, nearly 2.9%. So this would actually only be the biggest day of a rally going back to a few days ago. But the big move is in NYMEX and Brent crude. Both of those are falling, on track for their biggest drop since April of 2020 when the COVID vaccine came into the conversation. Yields, those also unwinding their moves, as is the dollar, giving up its gains for the year so far, Matt.
I'm looking at my WEI screen, and I have an EMEA view set up, and there are green boxes around nearly every single European index, which means they're moving up more than 3 standard deviations. That's a term that Tom Keane uses so often. I don't really know what it means, but it's a lot, right? 5+% for the Euro stocks gain, 5+% for the DAX gain in Germany, 4+% for the IBEX in Madrid, for the FTSE MIB in Italy. So just massive European
and wherever it happens. I'm Jemima Versace in Davos, Switzerland, and this is Bloomberg.
Moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller on really a momentous day, I think, for peace and for markets. S&P futures up more than 2.5% as the cash trade in Europe in some regions is up more than 5% on national benchmarks. NASDAQ gaining even more, 3.5% on the NASDAQ and the Russell 2000. You see here the opening bell. Down at the New York Stock Exchange, it looks like South American bottling, Coca-Cola bottling business ringing the opening bell. Coca-Cola shares have done well over the last 5 years, up I think 65, 70% down at the NASDAQ. Coin shares ringing the opening bell. And after Coin shares went public with a SPAC last week, the stock dropped 21%. The next day, it dropped another 25%. So they've been losing value for shareholders, but not for long. Maybe they'll gain.
I mean, it's not an easy market to listen to right
Absolutely.
now. So good for them for going for it anyway. Matt, a good day for the travel stocks. They're rebounding following the U.S.-Iran ceasefire agreement. Delta, we did hear from this morning. It was a mixed picture. So folks are telling us a little bit more caution. They're taking a $2 billion fuel hit due to the war. Still seeing demand, especially from their premium customers. But United, Carnival, all those shares, both those up at least 11% this morning, Matt.
Energy stocks going the other direction on the ceasefire deal because of the huge drop in crude. At one point, I was looking at NYMEX crude and saw a 20% drop. It went as high as $117 yesterday, and it was down in the low 90s for a while this morning. As a result, ExxonMobil says 6% of its global first quarter production was, actually, the stock dropped 7%, but they said 6% of their production was knocked out because of the war. So that's another story than the underlying price of crude. But Chevron is down 6%, Oxy is down 10%. So all of those companies move in the other direction, but they have had fantastic runs and are likely to have fantastic earnings. Speaking of that, we have one of the biggest bulls on Wall Street, John Stoltzfus, joining us, Oppenheimer, Chief Investment Strategist. He has an S&P 500 year-end price target of 8,100. And is it fair to say never wavered? Never wavered, John?
It never has wavered this year. And, last year we had a 7,100 target. At one point, we did waver on second tariffs that were announced, and then we reinstated it in July of that year at 7,100. We did.
By the way, did you take a lesson from that? Did you take, I hate to use the TACO acronym because it seems so petty. But, President Trump came out with these massive tariffs, saw the market reaction, and then said, hey, now it's time to buy stocks, and took them down. Did you realize because of that it would happen like that this time?
Less so that than just the fact that I think so much was at stake, not only for the U.S. here and for Iran itself, but also for Europe, for Asia, that the pressure to come to some kind of a ceasefire just would appear to us that it was inevitable, maybe not as soon as everybody expected, or not as away from the fact of long to accomplish. But we are surprised at how quickly this did happen. But we never wavered. We continue, with cyclicals over defensive, still take a look for babies that got thrown out with the bathwater and technology, consumer discretionary, industrials, financials.
Isn't it different though? Just, for lots of reasons, but for one, the fact that we didn't even really sell off that much throughout this whole thing. I think before yesterday, we're down 4%. We're less than 3% away from all-time highs. Does that kind of cap just how much any sort of relief rally might take place after today?
Well, I think it actually does. I think it's a great observation, Danny. When you look at last year was an 18.9% pullback. From as I recall, it was a date in February to April 8th, as I recall, it was some huge drop. And this year it was much less over something that would seem much more intense than tariffs being put in, and always the negotiation process that could happen with something like that, as it did. But we have to say that we think a lot of the things that are driving the market is that the private investor is intermediate to longer term goals. And as a result of both indirect and direct investments that they hold, the indirect being with institutions, but they control whether they're going to add to it or take it away. The power that has is intermediate to long-term investing. their goal is beyond, in essence. And in that, they recognize that something like this is relatively short term, as painful as it is when you go through it. But the longer term are things, the innovation in technology, the likely improvement, as we've seen over the years in terms of earnings, as a result of the advancements in technology long before AI became the catchword of the day.
I keep going back to this chart that Sebastian Boyd put up in the MLive blog, and it shows the drop in PE ratios that we have had throughout this war. Obviously, you've had the biggest drop in energy across regions because, and here we've got the chart up on screen, right? Because the E is expected to be so much higher. But if you look at the United States there in the second to last column, materials got 10% cheaper, industrials got 9% cheaper, consumer discretionary got 7% cheaper. What do you like right now, John, in terms of industrial industry groups, in terms of regions after this discounting that we've seen?
I think that in terms of the industrials, that's more of a global story. And in terms of it's both the U.S., in terms of its power, and in our industrial team, having technology heavily embedded in it. Europe also has good presence in that area. So does Japan, so does Korea, and other countries in Asia. So we'd say the industrial sector looks, especially with all the talk about how the stockpiles and armaments has gone down. It's inevitable that will have to be rebuilt. You think again that because of technology and the need for warfare today, to be it's done with cheaper military equipment. When you think of the drones, who knows what they're going to come up with?
What about for the companies that are exposed to supply chains in the meantime before it's built up? So be it energy exposed companies, the travel stocks that we're showing that are rallying a lot today. Do you think even if the ceasefire works morph into a longer standing agreement, that there are going to be scars left on these companies that we're going to start to discern as we head through their earnings?
I think without a doubt, likely not in earnings this season, but as we move through the other quarters of the year, perhaps. But for the better managed companies, our thoughts are likely just as the better managed companies did remarkably well through the process of COVID and prior to that, the financial crisis, in terms of recovery, the ability to bounce from it. We think that it'll be a positive surprises will still propel the S&P 500 higher, not necessarily like to the moon, and not necessarily without some thoughtful retracements along the way. But it looks like we are, and having been in this business since '83, I've been through every boom, bust, and recovery cycle since then. So I've heard of every reason in the world to get bearish. And sometimes it's right near term, but in the intermediate to long term, that would mean 3, 5, 7 years out.
Yep.
And that used to be 20 years as long term, and it still could be. But
how much wealth is created, John? Like in your career, buying these dips. Tracy Alloway had a funny or scary tweet, depending on how you read it, saying like, if there's a nuclear winter, I'm going to buy the dip, right? Because on the other side, either my portfolio is on fire or my portfolio is on fire. But it's true, isn't it?
Well, and the thing about it is when we look at it, we like to buy the babies that get thrown out with the bathwater, because when the trading floors and the trading rooms get wild with the energy to get rid of positions and highly leveraged positions, they throw the whole basket out. But in the process of that, that's where you find your really well-managed companies, your well-positioned companies in terms of their client base, in terms of their managing their suppliers. Those are the ones you want to get. We always say, don't buy the dip, buy the babies that get thrown out with the bathwater. And we found that in portfolios that we manage to be a remarkably good thing to do. We've had very good results. I'm not going to pitch my results, but last year we surprised a lot of people with the dividend portfolio. Well, we we were well in the double digits in terms of return, and this year we're still positive in our dividend opportunity portfolio, and we're across all 11 sectors, and we're very selective of what we own. We ride our winners. We're reluctant sometimes to trim and add something, but we always say when you get these dramatic moments on the downside, you usually find somebody who's saying, now's the time to get defensive. And we usually say, oh, it's a little late to do that. It's like, it's quick. Look for those babies, because there are these really good companies. Just think that, when you think of the tech bubble, my husband was 26 years ago. That's a long time. Temple's primitive that. And when we hear all this stuff that the AI and whether they got to be profitable, probably a lot sooner than expected, but again, not as soon as Betty would like to see.
I wanted to accelerate in so many ways.
Yeah, I feel like in 5 years from now, we'll look at this like, oh, AI was so perfect.
Right.
It was so cute. Oh, us and our little chatbots. John, we're gonna have to end it there. Thank you so much for joining us. It's so great to have you, John Stolfus of Oppenheimer. And by the way, a lot of those that have been thrown out with bathwater are getting bought this morning. Look at what's dominating. It is tech. It is consumer discretionary. If you look on your move screen, most stocks are higher this morning. Only 100 are lower at the moment. 102, as a matter of fact, are lower. What's leading us? It's Nvidia, it's Amazon, it's Broadcom. So it's all of the big mega cap tech stocks that are doing very, very strongly. Meta, Microsoft, Alphabet, Apple. To the downside, it will not surprise you that it's the energy names. Exxon down nearly 7%, dragging the heat index down by 5.5%. Chevron, ConocoPhillips, J&J, Verizon, AT&T. So you also get a feeling of some of the safety utility type stocks, and those are the two indexes that are down. Energy is on track for its worst day since April of 2025. It's undone a month of gains. Industrials, consumer discretionary, infotech, those stand at the top of the pile for a gain of about 2.5%.
All right, coming up, the U.S.-Iran ceasefire eases fears that strikes in the Middle East are persisting. We'll speak with Jennifer Gavito, former Deputy Assistant Secretary of State for Iraq and Iran next. This is Bloomberg Open Interest.
The problem we've got as an industry is when the government's overtaxed, and let's say they tax at 50 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Technology is embedded in every aspect of our lives,
and laying the foundation for the future.
from finance to defense, AI to entertainment.
And from the road to the stars, Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekend.
Only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Jill Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sarah Yan in Tokyo.
And I'm Heidi Stradwatts here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV.
Context changes everything.
It is a relief rally. Terry Haynes, though, cautioning just how long that relief could last. But we have a big rally on our hands. NASDAQ now up 3%. We are less than 3% away from all-time highs, despite the fact there's a lot of fragility in the ceasefire. But Brent crude, a huge drop, 15%, on track for one of its biggest drops in a few years at this point. Let's look at some of the top calls from the analyst action that we're focusing on. Barclays, they have downgraded Coinbase to a sell. They say the slump from earlier this year is likely to continue into next quarter, which could hurt profits as fewer people buy and sell crypto. I'm going to assume, though, that Bitcoin is rallying a lot today, so Coinbase is up nearly 5%. Next up, MoffettNathanson is upgrading T-Mobile to a buy, saying the company has been gaining a steady stream of customers from rural areas over the past 10 years. Look, hard to make any calls or upgrades and downgrades and have the stock move accordingly because it's the macro that's moving everything. T-Mobile moving lower as a lot of those safety type stocks move lower. And finally, Roth Capital Partners, they're downgrading oil stocks as a ceasefire in the Iran conflict drives a sharp drop in crude prices. I mean, duh. The firm says that fast money piled into E&Ps and it raised the risk of a pullback if oil keeps falling, and a big fall in oil stocks we are seeing at the moment. Diamondback Energy down 7.2%, Permian Resources down 7.8%, and SM Energy that is down 10.7% this morning.
Guess what?
What?
Bitcoin is rallying.
There we go.
Good assumption. Up right now, 3.5% to $71,706. Now, the U.S.-Iran ceasefire is offering relief to investors, but key risks remain unresolved, and the energy shock may be far from over. Joining us now is Jennifer Gavito, Senior Advisor at the Cooper Group. Jennifer has held senior positions at the State Department and National Security Council, influencing decisions on critical regions, specifically Iraq, Iran, and Libya. Jennifer, great to have you on the program. You know, one of the things, one of the criticisms I've heard a lot over the last couple of days is that we have now confirmed the power, the control that Iran has over the Strait of Hormuz and how important that is for the global economy. Didn't we always know that they had that power? Like, wasn't this always a risk, or was it a surprise to the Trump administration?
I think both of those things are true. And first, thanks for having me back on this morning. Iran has always had the power to close the strait. That has long been known, but it really had determined that that was a nuclear option, and so it never exercised that. It wasn't until this set of strikes began that we saw Iran kind of realize that vision. And it seems, at least in these initial hours after the ceasefire agreement, that there is some acquiescence on the part of the United States and the international community that control may continue in some form.
So what now, Jennifer, when seemingly ceasefire for 2 weeks, but seemingly the two sides very far apart still?
You're absolutely right. They are very, very far apart. And if, in fact, the 10-point plan that has been widely seen as far as the conditions for Iran for the ceasefire are the basis on which the negotiation is happening, it is hard for me to imagine that the United States, let alone Israel or allies in the region, will be able to accommodate some of those demands. I do think, it has to be said that the ceasefire is a positive step. We have always said that this conflict was never going to be resolved militarily. It would always require a diplomatic solution. And a diplomatic solution was never going to be possible in those, 12-hour, 24-hour, 48-hour windows that the president had issued. And so 2 weeks does provide a reasonable basis to see what may be achieved. But again, looking at the conditions, I think that both sides have and the red lines that we know exist, again, for both parties, not to mention, again, Israel. It is very difficult at this moment to envision how a sustainable end to the conflict is reached.
How much has this excursion cost us, Jennifer? Pete Hegseth this morning in his press conference for President Trump said that we've only expended 10% of our military power. But we also had a story last weekend that said, before this war, we had 2,400 of these long-range air-to-surface cruise missiles, and now we've only got like 450, and we're collecting them from other regions around the globe and bringing them to Iran.
Well, so for good reason, those numbers are not well publicized. I think that, it depends greatly on whether you're talking about defensive capabilities or offensive capabilities and what specific capabilities are in question. But certainly this has been a costly conflict so far. Over a dozen U.S. servicemen died as a result of it, not to mention the financial cost and the cost to our national security. I would add to that some of our key relationships, particularly with Europe, have also been strained. And we're hearing this morning that Israel is quite frustrated by having been cut out of the negotiations over the ceasefire. And so I think it will take some time to determine what the military cost of this has been specifically, and how the U.S. may be able to bounce back from that by increasing production lines. But in the meantime, I think that the problem is a bit broader than that.
I'm not sure if you've seen Alex Wickman put out a story this morning saying that the ceasefire has reinforced views also among our adversaries, not just our allies, but our adversaries, that the U.S. is maybe weaker than thought. That's the view from China. That's the view from Russia. All right. How much has this set us back in those terms?
Well, first of all, I think it's important to remember that there have been key beneficiaries of this conflict, Russia being one of them, with the removal of oil sanctions that now permit it to restock its war chest for its fight against Ukraine. So Russia has been a clear winner in this conflict. China, it's been reported, played a role in the mediation that led to yesterday's ceasefire. So again, truth into international legitimacy there. But as far as where the United States comes out of this, we don't yet know what the final terms of a long term into the conflict may be. But I think that there are some key questions, and chief among them are a month ago when this began, the Strait of Hormuz was open for free flow of travel. This morning, even after the ceasefire, that is not the case. Iran is, as I understand it, demanding some sort of toll for passage of ships, and that looks to be a long-term intent. And so are we fundamentally in a better position today than we were a year ago? You could argue that the United States has had significant tactical and military success against a wide range, tens of thousands of targets inside of Iran. But when it comes to strategic objectives, including the reasons that were initially laid out for entering this conflict, specifically degradation of the nuclear program, degradation of regional properties, and ensuring that Iran cannot project its power outside of its borders, I'm not sure that any progress has been made on those.
Okay.
And added to that, we now have arguably a harder line regime in place than we began with.
Yeah, it's the big fear for this moment. Jennifer, I'm sorry to jump in. We're just up against a commercial break. Thank you so much for joining us. Jennifer DeVito, Senior Advisor of the Cohen Group.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Trading day is about to start.
You're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
On that way, look at the other way. Once you just start risk weighted,
I would much rather be long than be short.
we're in a kind of sweet spot. Very, very strong alignment.
Three revolutions in one.
I'm Guy Johnson.
I'm Edward.
And I'm Tim Vincent. This is your opening trade.
Every trading day.
Only on that.
It's a multi-trillion-dollar industry, and we'll show you what's happening in ETFs like no one else.
Spire oil drops back below solidly $100 a barrel and ships await a temporary reopening of the Strait of Hormuz, and treasuries rally with bets that the Fed will resume its rate cuts and auction for 10-year notes on deck this afternoon. Let's take a look at what's going on in the markets. You can see S&P futures at their session highs right now, up 2.7%. NASDAQ futures up 3.5%. The small caps doing even better. So a massive rally here, and we have seen a massive rally in Europe as well, with some benchmark indexes rising almost 5% this morning. Take a look at what's going on in treasuries here. You can see the rally pushing down on yields. So the 2-year yield down 7 basis points to 371, 372. The 10-year yield down 6 to 423 even, and the 30-year yield down 3 basis points to 484. Of course, most importantly, oil, or at least it has been driving this market over the past month and weeks as the war kicked off. Brent crude down 14% to 94.45. We are looking at NYMEX WTI down 16%. And at one point, it had been down almost 20%. Right now, trading at $95. Yesterday, it traded up to $117. And we saw Brent crude for delivery reach an all-time record since record keeping began. Gas, oil, fuel trading on the Intercontinental Exchange down almost 20% as well, 18% the drop there. But some of the individual stock stories that we're watching this morning, let's get out to London. Chloe Millay is standing by. Chloe, what have you got?
Good morning, Matt. As you just mentioned, the reopening of the Strait of Hormuz, this 2-week ceasefire that has been announced, has sent oil prices tumbling. And so we are seeing that reflected in the shares of those big oil companies that had, of course, been really benefiting from this major disruption to global energy supplies since the beginning of the year. So we're seeing this reversal in sentiment and all of those names falling significantly today. On the flip side, we've got airlines that are doing much better. This is a sector that has really struggled since the beginning of the conflict because of flight cancellations and also because of rising jet fuel shortages and prices. And so now this ceasefire comes as a huge relief, and we're seeing those names move much higher in pre-market trading. And finally, there is a lot of broad-based optimism across equities, and another sector that's benefiting is the chip stocks. They had been struggling as well since the beginning of the war because of concerns about higher energy costs and higher yields. And today, this also comes as a big relief, and therefore we are in the green as well for those chip sector.
All right, Chloe, thanks very much. We'll get back to you a little bit later on. Coming up also in this hour, Tina Fordham is going to join us of Fordham Global Foresight with a closer look at the ceasefire deal, plus its implications on global growth with Lucy Baldwin of city. Let's talk about that U.S. Iranian agreement to stop the fighting just hours before Trump's genocidal deadline. The president made an announcement on social media cautioning the pause is contingent on the reopening of the Strait of Hormuz. Iran's foreign minister said safe passage through the waterway will be possible during that time and vows that Iran will cease defensive operations if attacks are paused. Let's get to our team coverage with Bloomberg's Jumana Bersetchi and Washington Deputy Bureau Chief Laura Davidson. Jumana, first to you, what do we know about the 10-point plan that the Iranians put forward? President Trump apparently said that was a good basis point for negotiations. What do the Iranians want?
Yeah, well, I mean, that's a very pertinent question because we're heading into what will be 2 weeks of intense negotiations, we imagine, over the coming days. And the starting point for that are some of the very maximalist demands that Iran has laid out. That 10-point proposal, now, President Trump has described it as being a workable starting point, but some of the demands are indeed quite maximalist and I would say non-starter for many in the region, including the right to sovereignty still over the passage of vessels through the Strait of Hormuz, a full cessation of hostilities, assurances that the U.S. will not strike again. They would like to maintain the series of proxies that they have in the region, the so-called axis of resistance. And indeed, they've actually linked the ceasefire in Iran to ongoing operations in Lebanon as well, something with which the Israeli Prime Minister has come back and said they would not accept on their part. And then beyond that, they're also asking for war reparations as well. So a broad list of demands coming through from Iran, very maximalist, unlikely that the U.S. would actually concede to those demands, but a starting point for discussions. And indeed, I will tell you, we are in a very different place than where we were about 12 hours ago when there was a real fear that this could perhaps escalate out of control. Today, the region is breathing a sigh of relief, but it is very tenuous, and we've got to see what the next couple of days brings.
All right, so far from the unconditional surrender that President Trump demanded at the outset of this war, yesterday he threatened the death of an entire civilization. Laura, how does the president spin this as a victory?
So this is a standard Trump playbook of, despite what the actual facts may say, or if a deal has really been achieved here, he's gone out and declared victory. I'll note that, as Jumana said, this is a very tenuous agreement. It is just 14 days. It is not at all clear yet if each side is able to turn this into some sort of more durable peace deal. Right now we have, based on the statements coming out from both sides, both the U.S. and Iranian sort of statements indicate they're seeing this and hearing what they want to hear from each other. For example, Trump has said that the U.S. military is going to help escort ships through the Strait of Hormuz. The Iranian side has said that their military will also be involved in that. So there's a lot of discrepancy here about exactly how this 14-day, these top-line agreements are implemented, much less, something more lasting, regarding Iranian's nuclear program, its ballistic missile arsenal, for example. But it's clear that Trump was under a lot of pressure at home. He had, people who had been allies, folks like Tucker Carlson, Republican senators in Congress, who were really criticizing his statements and rhetoric from a day or two ago, suggesting he was going to return Iran to the Stone Ages. That really all proved to be too much, coupled with the economic pressure that voters are feeling and really warning signs ahead of the midterms. That all culminated into what we saw transpire just about 12 hours ago.
Jumana, the president has repeatedly claimed that the U.S. military has achieved complete and total regime change, even though it seems like the IRGC is still in charge of the same theocratic regime. Do we know who's negotiating on behalf of Iran?
Well, you raise a very important point, which is, and what some people say quite flippantly is, there's been a replacement of one Khamenei with another Khamenei, obviously his son, the son of the former supreme leader. But ultimately, just stepping away from that, there doesn't appear to be at least visible signs of regime disintegration. And we know that the hardliners from the Revolutionary Guard, the IRGC, the clerics have been calling the shots here. They've been very vocal, obviously, on social media. A lot of this war has played out in social media. Now, Iranian state media reported a couple of hours ago that into these potential in-person discussions in Islamabad, we may be sending the Speaker of the House, that is Mohammad Ghalibat, who has been one of the most vocal and strident voices. If you look at everything he's posted over the course of the last couple of weeks, nothing would have suggested that they would actually come to the table and start these negotiations. And I think a lot of that can be credited to Pakistan, who played a key role in mediation here, and also to China as well, something which President Trump has referenced himself, for the role that China played in also bringing Iran to the table. But to go back to what we were saying here, Iran has identified that they have a new leverage point, and this is a point that did not exist a couple of weeks ago in the Strait of Hormuz. So in addition to the demands that they were looking to negotiate even before the war even started, there's now an additional point of leverage. That is the Strait of Hormuz. So if the U.S. say that they've managed to regain full and free shipping through the Strait of Hormuz, but not deal with the other issues, then we're sort of back to square zero again.
Free being an important word there, considering the fact that the Iranians seem to want to charge a toll on ships passing through the strait that they also seem now to control. Jumana Bersetchi and Laura Davison, thanks very much for joining us. We'll talk to you, I'm sure, a lot throughout the day. We really appreciate your hard work. Oil plunging below $100 a barrel. WTI posting its biggest drop since the pandemic, and U.S. natural gas futures the lowest since August. Let's bring in Bloomberg energy reporter Anthony DePaola in Dubai. And Anthony, it's been pointed out a few times already last night and this morning that there's really an asymmetric set of probabilities here. I mean, it would be really difficult to get oil back down below 80. Surely impossible to get back below 60 where it had been at the beginning of the year for NYMEX. But anything goes wrong and it instantly jumps back above $100. Do you see it that way as well?
Well, we're certainly in a risky period here. So the market is taking a deep sigh of relief. As Jumana had just mentioned, the region is reacting to the fact that we haven't seen an escalation of the war here in this region, and that impacts oil markets as well too, because there was a threat against a lot of infrastructure. So that's why we're seeing this big sigh of relief in the market. But we are clearly not out of the woods yet. There remains a lot of oil stuck inside the Persian Gulf, both crude oil as well as refined products, and that needs to clear. With the uncertainty around the terms of how open the Strait of Hormuz will be, if that's going to be open with only the permission of Iran, whether there's going to be some payments involved there, that is still very unclear. And those tankers inside the Gulf need to clear first before we can get oil flowing back to the market. Then we would have to see, once that safe path is proven, tankers that are willing to come into the Gulf and pick up crude oil, at which point some of those producers inside the Gulf could resume loading new barrels of crude, newly produced oil, because a lot of those producers were forced to shut down because they couldn't export the oil. Storage tanks became full and they had to shut in production. So we really need to see the flow begin before we can see that oil production ramp up. And shippers, producers, buyers are really asking for certainty before they move into that process of normalizing. So we're not going to see the prices coming down until we do see that. So we are still in this, and we've still got some ways to go before we can see some normalization and those prices falling, as you mentioned before, Matt.
Anthony, many of us are tourists in this market and have been learning a heck of a lot over the last couple of months. Dated Brent, which is apparently the barrels of oil for almost immediate delivery, hit an all-time record yesterday, since record keeping began in the 80s. And of course, we've all been hearing about how much jet fuel is costing the carriers. How are these other barrels or distillates being priced right now?
Yeah, so the Gulf is a big exporter of middle distillates. That's diesel, which goes into trucks, so highly important fuel for all kinds of transport, as well as the jet fuel, which they ship a lot of that, had been shipping a lot of that to Europe. So the Gulf is really important, particularly for the European supply of those middle distillates, whereas the crude oil is going, lots of that is going mainly to Asia, as well as smaller amounts coming to Europe. So it's a really key market for that. And so we have seen the products really increasing because they've been blocked in. You mentioned the dated Brent price. So another thing is price discovery here. When the benchmarks that set Gulf oil are pretty much trapped inside the Gulf, traders don't really have the benchmarks on which to price the crude. So we've seen oil that loads outside of the Gulf, that's the Omani crude, those prices have been skyrocketing. Whereas Dubai crude, which is it's a very small flow in terms of barrels, but the price is set based on a lot of other crudes in the Gulf that come out, and those have not been moving. So traders are really scratching their heads on how do we price these things? What is the benchmark? And then that has led to some real dislocations, particularly on things like those products, which haven't been able to get to the market. And that's been exacerbating the issue of the crude that hasn't been able to get to the market and get into the refineries to make those fuels. So we've really seen that back up, particularly on those middle distillates, diesel and jet, as you said, Matt.
All right, Anthony, really appreciate your coverage. Anthony DePaula there covering the oil markets for us. Coming up, more implications of the ceasefire deal with Tina Fordham of Fordham Global Foresight out of London next. This is Bloomberg.
When I moved to New York City from India, the only thing which I had was a physician. But when I arrived here, I thought there was something missing. So that's when I started working on Wall Street, covering pharmaceutical stocks. I wanted to learn different skills to expand my impact in medicine. Then I moved to Silicon Valley and founded Unicisive. Finding my own path opened up opportunities, helping folks that I couldn't have imagined.
Navigate risk with confidence. Realize bold ambitions. Unlock transformative growth. At Marsh, we believe perspective powers progress. We put our more than 150 years of expertise to work for you, helping shape your future with clarity, momentum, and resilience.
This is Bloomberg Brief. I'm Matt Miller. Jennifer Kavanaugh of the libertarian think tank Defense Priorities weighing in on the latest ceasefire deal between Washington and Tehran, saying that it's a relief President Trump took an off-ramp, and I think almost everyone would agree with her there. But she said if he was going to back down, he did so in the worst way, raising the stakes so high beforehand. He maximized the damage to his credibility and global perceptions of U.S. power. This is a clear strategic defeat for the U.S. Let's ask Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight, how she sees it. And Tina, I think you'd agree it's a tremendous relief that we didn't decide to bomb Iran back to the Stone Ages and kill millions of people. But how do you think it looks the way we went about it?
Well, I was just talking to some clients here in Europe, some of our corporate clients about how it looks. And of course, there's relief. And yet, the idea of thinking the unthinkable of an American president threatening to, mass murder, in effect, on a country of 92 million people and then scaling back from it, it leaves scars. And I think that has to be understood. One of the things that my client said is the unpredictability of the US is forcing them to reconsider their plans, because I think everybody understands that this ceasefire, buys time for 2 weeks. The proof is in the pudding in terms of whether ships will actually traverse the Strait of Hormuz, and insurers will be willing to put that cargo and those sailors at risk. And then there are the implications of Iran effectively coming out of this in a stronger position than they started.
I wonder why the president continues to restate that we've achieved complete and total regime change when it looks like the same people are in charge, albeit, the son rather than the Ayatollah. But the IRGC and this theocratic regime that everyone has had such problems with for the past 47 years remains unchanged. How do you see that?
I see it as a consequence of a policy that really painted the White House into a corner. Whether it's because the Israelis oversold the prospects of regime change or some other, element of White House policymaking, and the fact that the war aims of this operation were never telegraphed, were never, presented to the American people. We only saw the U.S. Treasury Secretary on the U.S. Sunday morning talk shows. The war is unpopular with Americans. People will be relieved in the short term at calling victory if indeed it ends up being that way. But any outcome, from a market perspective and a global economy perspective that leaves Iran in control of the Strait, one of the world's most significant choke points, effectively using it as a toll road, can't be seen as a victory. It means that regime now has a near permanent source of leverage. And why would they give that up?
What about the nuclear situation, Tina? What was your analysis of the previous agreement where we, through diplomatic means, had been checking on the enriched uranium, the JCPOA? And what do you think? How do you think we stand now that most likely that highly enriched uranium is buried, but we actually don't know exactly where it is?
Well, we don't know, and there were some suggestions that there might have been some special forces operation to recover those highly enriched uranium supplies. But your question is very well taken, because of course President Trump withdrew from the JCPOA, a diplomatic agreement which had its many flaws and yet did include an inspection element. And whatever happens with Iran and its supplies, which it's always seen as a source of both national pride and protection from invasion, we're looking at the widening of a nuclear arms race in the region, with the other countries, Gulf and otherwise, also looking to obtain this. Countries like Pakistan already, previously agreeing a security pact with Saudi Arabia. And so the job of monitoring and enforcing some kind of international infrastructure to prevent the use of weapons of mass destruction now became a lot harder. And of course, every country is going to want one.
I wonder about, President Trump had demanded an unconditional surrender at the beginning of this war. And now Iran has laid out 10 conditions under which it will surrender. How does he negotiate those conditions, especially considering that part of that we understand is that the U.S. military and Israeli forces stop attacking Iran's proxies while Benjamin Netanyahu continues his war in Lebanon?
Well, indeed. So when it comes to U.S. diplomacy, I mean, the Iranians, who have an amazing trolling game, if you haven't seen it on X, say that they aren't in touch with anyone. And what does appear to be transpiring seems to be by text message, still involving the Omanis. Now, of course, Pakistan, not usually a security and diplomacy partner for the United States on major agreements. And I think what we're seeing, Matt, is the limitations of real estate transaction diplomacy by text message.
What's the most important element that you're watching for in the next few hours and days?
Traffic through the strait, whether ships get through, what the kind of selection process is, how much good faith compliance there is with this agreement. We've already seen Israel saying that it won't refrain from its incursions into Lebanon. And what's called cheating in international affairs. Who cheats first, and how they do it.
All right, Tina Fordham, great to get your insight. Really appreciate it. Tina Fordham there, Global Fordham Insight, talking from London. It's time now for your front page news. First up on the New York Times, the Republican win in the special election runoff in Georgia to replace Marjorie Taylor Greene. Democrats had hoped for a strong showing, but Clay Fuller will serve out the rest of Greene's term in the House after receiving endorsement from President Trump. Next up on the Wall Street Journal, President Trump rebuffed requests from Ford and other U.S. automakers for relief from aluminum tariffs, fires at major U.S. factories, creating bottlenecks, or one in particular for vehicles such as the F-150 have added to Ford's challenges. And finally, the Financial Times reporting that Perplexity's revenues have jumped 50% in a month as the company leans into AI, really its only business. The company shifted from a chatbot style search engine to AI agents that carry out tasks on behalf of users. Taking a look at what's going on in markets today, it is particularly remarkable to see oil coming down double-digit percent. So Brent crude off now 14% to $93.86 a barrel for June delivery. NYMEX crude down 16% to $94.93 for May delivery. And at one point we saw crude down, NYMEX crude down 20% from a high of $117 a barrel yesterday. Interestingly, gold rallying up 2% now to $4,800 a troy ounce. In terms of futures, we see absolutely massive moves in European cash markets. Some indexes up as much as 5%. The DAX, for example, S&P futures gaining 2.7% right now as the dollar comes down and the 10-year yield drops with investors buying bonds. We have a 10-year auction today we're paying very close attention to as well. Coming up, we speak with Lucy Baldwin of Citi on global growth amid the U.S.-Iran ceasefire. This is Bloomberg.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions.
I cannot get the premium on this. No, it's going against you.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the market, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
It is 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning.
Okay. Oh my gosh.
Let's get you set up for is already looking like an absolutely amazing.
It's just fucking wrecked.
Stocks are soaring and the dollar dips after the U.S. and Iran